Now on to the balance sheet. So the balance sheet is meant to tell us how much our business is worth and where did the money come from to pay for it. So where did the finance of the business come from? So we have four headings that we need to deal with here. So the assets are things that we have. Fixed assets are things we have that we are going to use for a long period of time. Current assets are things we have at the moment, and those things will get used up fairly quickly, and then we'll have other assets will come along to replace them. So these are things that we have at the moment. Liabilities are debts, bills that we owe, money that we owe, and current means that we owe these bills for a short time and we will pay them off over the next kind of days, weeks, maybe months. Okay. Finance by then is how did we pay for our business? Where did the money come from long term that we invested in trying to build our business? So some examples here. So fixed assets, you might have things like maybe some machinery that we have, or maybe the building if we own our own building. Current assets might be maybe cash that we have at the moment, or maybe people owe us money, people called debtors. So debtors are people who owe us money at the moment. We haven't got the money yet, but that money will come in soon. So this is money owed to us. Current liabilities is money we owe at the moment. When we buy goods, most of the time businesses buy goods on credit, which means that we buy now, pay later, and those people we owe money to are called creditors. Okay, we might have other things like we might have electricity bills that we haven't paid yet that we owe. They're all current liabilities. Finance by is how we paid for our business. Initially, when we set up our business, we would have put in money called capital. And then as the business continues and we decide to, maybe it makes profit and we decide to keep some of that profit and use that to pay for expanding the business, well, that would be retained profits. That'll all be included in here. So I have an example here from the balance sheet exercises that you'll be doing. So I'm going to do example 1, okay, exercise 1 here. I'm going to put this over my sheet. So at the top of the sheet, just quickly make sure that I'm labeling it, okay? So I'm just going to stick an extra line in here. So I'm going to put the name of it because at this stage, we've done quite a lot of questions and we need to kind of keep track of what we're doing. So this is balance sheet exercise 1, okay? So we have our 4 headings. Actually, that hasn't gone through. So I'm just going to say, oh, it is there, yeah. Okay, so I want to make this easy to read, so I'm just going to zoom out a little bit. So in terms of fixed assets and etc. So here's all the information here. So the easiest way of doing this is to label each number or each item so that we know where it goes. We only have 4 places. It can go fixed assets, current liabilities, and finance by. So we start, like with the other questions, by laying out the blank document that we'll put all the information in. And then we go to the question, we decide where should all these things go. So machinery, well, machinery is something I have at the moment. It's going to last a long time. So that's something that we have. So that's a fixed asset. Closing stock. So this is something we have at the moment that we're going to use up fairly soon. So that's a current asset. Debtors, people who owe us money. So that's money that is owed to us. It's a plus for us. So that's also a current asset. Premises, so it's our own building. So that's a fixed asset. Bank overdraft. So this is, you did this in first year. This is money that we were allowed to overspend by the bank. So the bank gave us permission to write checks or spend money more than we had in our account. So we owe money to the bank. So that's a current liability. Cash. So this is money we have at the moment that we'll use up fairly soon. So that's a current asset. Issued share capital. One of the main ways of financing a business. So that goes into finance by. Retained profit, so this is profit we've kept in the business. We're going to use that to pay for other things for the business, so that's also finance by. And creditors, people we owe money to, so they're going to pay them fairly soon, so that's a current liability. So we've now labeled where they go and now we put them into the question. So machinery goes up here and we'll put the answer in the middle column, so 12,600. We'll add all of our fixed assets together at the end when we're finished. And I'm just going to make sure that all of these columns, that we align the columns to the right, so that we end up with units under units, tens under tens, like what you were taught in primary school. Next number we have here, closing stock, 1670, so that's a current asset, so I'll put that in here. Next we have debtors, 43,800, we've called them also a current asset. Again, if you're unsure, the same as what you've been doing with questions before, look at other questions that you've done in the past and see how did you actually do it in that question. So you'll be looking at previous questions. We've got premises then of 90 grand. Then we've got bank overdraft, 2870, so current liability. And then we have cash, 1500, so that's a current asset. They may call it in some other questions cash on hand, but it's still the same thing. It still is cash, money we have at the moment. And then we've got issue share capital, which is one of the main ways of financing a business, so that was 80 grand. We have retained profit, 39,200, so that's another way of financing a business. So retained profit, remember, is some of the profit the business has made and has decided not to pay it out. We're going to keep the business and use that for financing as we expand our business. And the last number then is creditors, 27,500. So that's a current liability. So 27,500. Okay, so now let's move on to the second stage. We have all the numbers put in. So we decided number one, there's the categories, okay, of information, okay, current assets, current liabilities, finance by, and we start off with fixed assets. We then labeled where they go, and we then put the numbers into the question. So the last thing we have to do now is we've got to do the maths, and we have to be quite particular about where we put numbers in the columns. We saw this when we did profit and loss to make sure we answered the question properly. So at the top, the fixed assets, I'm going to add all my fixed assets together. So I'll add my machinery and I'll add my premises. Then I'll come to my current assets. So I'll add all of my current assets and I'll put the number to the side. So I get 1670 for closing stock plus my debtors and my cash. My current liabilities, I'll add those two numbers together. So I have total current assets, total current liabilities. So assets, current assets are things we have at the moment or that people owe us. So it's either cash, money we have available at the moment, or money that will soon be available to us. But we can't spend all of this money because we have bills that we have to pay to creditors and our bank, whatever. Okay. So when we're going to subtract the two of these, I'm going to put the answer here and I'm going to call it working capital. So working capital is the money you have to play around with. So this is a bit like asking your parents how much money is in the bank account at the moment. If there's 400 euro in the bank account, can we spend all 400 euro? And your parents say no, because I've got bills waiting. So this is like the cash that your parents have, and this is the money that we owe at present. So we can't spend all this money. So the real amount of money that this business has available is about 16,600. So that's taking the bills away from the cash that we either have now or soon will have to pay for those bills. So I'm trying to work out a figure of what the business is worth. So this is the cash we have to play around with, the 16,600, plus all the money invested long term. We call that number, when we add these together, we call it net assets. I'm going to add this together. So we got 16,600 plus the fixed assets 102. So this business is worth 119,200. So financed, so how we paid for the business. So we paid for it by putting in 80 grand initially and saving 39 grand worth of profit this year. And if you've done the question right, these two numbers should be the same. So I'm just going to total this by having a single line on the top and a double underneath. If you've done it right, these two will be the same. So this is what the business is worth, and this is how we paid for it. Okay, so that's how to do a balance sheet. Hopefully that makes sense to you.